Okay, we are live. Okay. Good. Let me know once you have. Can you see 9x with your phone? Wizard see.
Yes, X is possible to see. Yes.
Okay. Okay, then you start. Hi all, today we are joined by Rational Root in the 36th episode of our podcast Store of Bitcoin, Bitcoin as a Store of Value. Rational Root, as you know, is a well-known Bitcoin on-chain analyst and educator. He has built a reputation for breaking down complex Bitcoin data into clear, actionable insights. If you have seen his charts, reports on Twitter threads, you know he combines deep on-chain analysis with a macro perspective, helping Bitcoiners understand not just price movement, but the bigger picture of adoption and market cycles. We will be diving into his work, his views on Bitcoin future, and what the data is telling us right now. Rational Root, welcome to the show.
Thank you so much for having me, Alessandro. It's been a pleasure. I've been a follower of you for a long time, I believe, a couple of years, even like I think during the 2020 cycle or so. And I love to always have a good talk with passionate Bitcoiners. So happy to be here.
Great. Yes, we had also some exchanges, especially last year on Bitcoin Path during the ETF. I became more active during the ETF's launch, so it was great. Also, I was following you and following all the chart I'm doing since then. So great to have you.
Yeah, the ETFs were an exciting catalyst in the cycle, of course, and it's when I also built the ETF tracker, which I think was quite helpful at the beginning. And so I think we interacted a bit there as well.
Yes. Also, we welcome Francesco and Johan, the other two co-hosts, as always, for great conversation. Hi, Francesco. Hi, Johan.
Hi. Hi.
Hi. Hello.
Nice. Looking good.
Yes. Let's start with the first question coming from me. For you, Ruth, when you first started analyzing Bitcoin cycle and on-chain data, what drew you to this approach, and how has your perspective evolved since then?
When I started, actually, I got into Bitcoin in 2016, and I had some experience in distributed systems. And so I actually, understood the value of the technical side very quickly. So I was a bit fortunate there, I guess. And then, of course, I wrote that whole 2017 cycle, and we got in the 2018 bear, and then of course we had this 80% drop, and I thought, like, because I was more into the technical side at this point, I actually thought, like, oh, but the tech got better, Bitcoin fundamentally got better. And that's when I kind of realized, like, okay, psychology of the market is totally not the same as fundamental development of Bitcoin itself. And so I was super fascinated then. And then I was, also fortunate that I could already dedicate like my time. Actually, when I found out about Bitcoin, I practically started working on it full time. I was completely hooked from the beginning because I understood the value of the tech pretty well, and I thought like, wow, this is amazing. Why is not everyone like looking into this? Why is it not even in the news or so? And so I and after that 2018 bear market, I wanted to be really prepared for the next cycle. So I started actually building a strategy tool to start like back testing strategies. And I quickly realized that on-chain data is super valuable. Like the best strategies I could come up with were all based on-chain indicators. And so I actually, I had my own nodes. I started pulling some data, and it was super new field. So it felt like working on the frontier. So it was really fun. It was exciting to do. And so I was trying to build some of these on-chain indicators myself in the beginning. And then I went more into the analysis part because I really want to understand the cycle of Bitcoin. And so I started mathematically defining the cycles, and I started sharing some of my work on Twitter, and that actually got picked up by Adam Back in the beginning. So I was kind of, oh wow, cool. He's mentioned in the white paper, so it was pretty cool that he liked my charts, and then that here we are today. Working on it since.
Nice, and it's great also that you found this spot, because many also complains Bitcoin has no cash flow, Bitcoin has no PA ratio and discount for the future, but we have on-chain data where we can also analyze how things happened. So good to know, and interesting that you were in Bitcoin since 2016.
Yeah, I mean, no one ever has enough Bitcoin, right? But I was fortunate enough to understand it fairly fast, and so I'm not complaining either.
Great. Francesco and or Johan, you have any point on this?
No, I mean, yes, go ahead, John. Go ahead.
No, I just wanted to ask Ruud, after 5 years or even more analyzing Bitcoin, so do you have a favorite metric or a favorite combination of metrics that you think is most valuable?
Yeah, so there's no such thing as one metric that is the best. You always try to look for confluence in general. So on-chain is a tool, TA is a tool, and so whenever you can find confluence with certain metrics or certain type of data, it's a lot better. Because it's always about probabilities, and even if one metric does very well on historic data, it's not really guaranteed that it will so on the future. For example, the typical example for that was actually in the 2020 cycle, we had like this distributed top instead of like a blow off top, which we used to have in previous cycles, and then suddenly the indicators didn't spike as high, and so everything is with context, and it also very much depends, I guess, on the position of the cycle that you're in. So if you're in a bear market or so, you really want to look for capitulation events. But maybe now in the markets that we're currently in, we want to look more at like local bottoms or so, or like short-term holder behavior, like what's price going to do, and so it very much depends a bit on the position of the cycle, and ideally, you find confluence between many indicators.
All right, thank you.
Okay, what do you think about the impact of all of the future market, also ETF, but ETF could be a good metric because there should be settlement on chain at some point. They can be delayed 1-2 days. I don't remember the rule, but that's about it. But you still think that with the market cap going up like this, and many purchases are being made OTC, so the on-chain footprint is gonna bit delayed. Do you think the on-chain metric still a value is going to be as important? Because for sure in 2017, 2020, it was the volume were lower and the market cap was lower. Now it's all about institution, and their way of purchasing is a bit different than So that's a bit of point.
Yeah, it's a good question. Yeah, I think indeed you're right. I mean, the market is becoming more and more complex, and you're going to have like more, secondary markets trading, and so on chain is going to maybe have less signal somehow. Although I still think there's a lot of signals in the on-chain indicators, and sometimes it's not so much about the absolute values, but it's more about the change in the value or so. So, for example, if you get hype in the market, and short-term holder supply starts to rise, maybe some of that supply is also classified as long-term holder because of ETFs, secondary markets, which there's a lot of demand there, but then that demand, which could be potentially short-term holder demand, is suddenly classified as long-term because it goes through a custodian. And so but nonetheless, the rate of change of the metric, it does matter, because some ETFs are classified, like Bitwise, for example, they are classified as short-term holder, and so you still have that rate of change in the supply visible, and so it's not so much about the absolute values, like how many coins are there compared to the previous market, but more about the rate of change, and so it's like you can use it as a proxy, right, for measuring hype in the market, and that's why ideally we want confluence with other types of indicators, and so we also look at ETF flows directly, so by pulling them and observing them, and you can kind of you need to take that in context for the on-chain data as well.
Yeah, so more about the behavior, the indicator, and the change gives a direction. If you bind it with probabilities, also past history can point out to something, I guess.
Yeah. So exactly. So when there's hype in the market, or when institutions start, applying capital to Bitcoin, they do so perhaps through ETFs, but then also a part of that will go through Bitwise, which will, for example, be classified correctly, and some of them might be classified, wrong, but still, the metric will go up because some of it is correct, and so that still gives an edge, to the market.
Yeah, I see that the MVRZ score has always been on point. That I would say is a favorite metrics to look at, maybe that one. And do you like that indicator? And would you use a combination of couple of indicators if you had to mark the top? No, do you think
Sorry,
MRVZ?
which indicator were you mentioning?
MRVZ score.
MVRV Z-score. Yeah, so MVRV Z-score is basically a standard deviation, from the average purchase price, or you can do it also for short-term holder metrics. And I still think it's a good indicator, although as we saw in the past, when we had like more blow-off tops, those indicators would have higher values and cycle peaks, and so there's no guarantee that we'll get like a blow-off top this cycle. We might as well just kind of keep on rising gradually as we have been doing, and get more of like a distribution. And so then MVRV will never really reach that same value as it did in previous cycles. So that's just something to take in mind. Nonetheless, it has been rising, and so it's clear that we're in a bull market also from that metric. But generally, I what I try to do is also really curate some metrics. And because there's so much out there, and everything really depends on context is really important, because you can look at MVRV and think we're still gonna get a spike, as we did in previous cycles, but that doesn't necessarily have to be the case. If we look at institutional flows, they're much more gradual. There's less retail hype in the current market, and so actually I expect those metrics to not have not spike in values. It's much more likely to be more distributed.
Thanks, Ruth, for the answer. And you mentioned also about the cycle. Now let's go on actual cycle, because your models and charts often focus on the long-term Bitcoin cycles. What do you think on-chain data is telling us right now about where we are in this cycle? And one note from me, I'm in Bitcoin since I heard about Bitcoin 2017. I remember before the blow-off top in December. And then I started more and more to learn in 2020, 22. Obviously, it was in the peak 2021. It was in November. So we have December 2017, November 2021. In theory, it should be in October or in Q4, the peak of this cycle. What your on-chain data are telling us?
Yeah, maybe I can maybe share a chart. Let me just pull it up.
Live Alpha by Root.
So this is the 3D spiral chart, which I think is pretty cool. Although it's a little messier, for people that are maybe not familiar with the spiral. But if you're familiar with the spiral, this is pretty cool to look at. For example, here, of course, we display the Bitcoin cycles. Like each rotation in the spiral represents a period of 4 years, and with on-chain, we kind of are able to differentiate between bull and bear markets. So you see really like the bull markets here on the right, and the bear markets with those red dots, which are the bottom below. And actually the surface of the spiral here is kind of like fair price, you could say, by the metrics I use here. But this is based on actually a capital inflow into Bitcoin. It's based on coin days destroyed, and it's also based on actually available supply or tradable supply that actually actively participates in price discovery. And so that allows us to create this view. And actually the quadrant here now in the bottom, that's the bull market. So currently we are here, 15 of September 2025. And yeah, practically the peaks of previous cycles all were like towards the end of the year. So actually the next quarter is one of the most bullish quarters in terms of the 4-year cycle. The question is, will we again get a parabolic move? And as you can see, we have actually, this was the ETF pump here. That was fairly high. That was the highest one we've seen actually from the surface. And then we had the election that was slightly lower, and currently we're definitely lower than previous cycles in terms of like in terms of standard deviations above that surface level, let's say. And so I think, I mean, if you look at this view, you would expect that it's still possible to have a blow off top towards the end of the year. However, we did have a more gradual market, as we saw, and we also had actually a bit of a reset. Like for example, this the low that we had here after the ETFs, which let's see. I think the ETFs was actually here. I think this was I'm wrong. This is the election here, and so we had a reset after, because the blue dots are the halving.
Okay.
So we had the fourth halving. This is the all-time high before the fourth halving. So that was also a bit of a, not a normal event, all right? An exception, but it had a clear catalyst, which was the ETFs approval. So that was a big moment for Bitcoin. That's why we reached an all-time high before the halving. And then after the halving, we had this reset, kind of like towards the surface. Then we had the election pump. We again had a reset. And now we're moving back up again. And so the fact that we've had these like fairly substantial resets also definitely like I have another chart which we'll share in a bit, I guess, about a short-term holder profit, which really shows that the profit of short-term holders in the market went to near zero. And so typically, like historically, we only saw that during bear markets actually, and so now we've had that a bit during these bull markets. So those are a bit of like the signals that it's slightly different this cycle. Of course, we had the gradual rise, which I think is because of two main reasons. Like one is institutional flows into Bitcoin, and which is just more gradual demand. And the other is also like a lot of sell pressure from the hodler cohort, which we also can get to a bit later. I actually have some charts on that if you're interested to see it.
Yes, okay. Interesting chart, and also we can see that this cycle is slightly different from the other, starting from all-time high before the halving, and now we have a long period of consolidation. We can also say we are in the range. We have above 100K now since 4 months, but from in December we reached 108, and now we are 115. In mostly consolidation. We had a checkmate a few weeks ago, and he was telling that now the structure change, not the structure change, like the level change. It's like when we hike a mountain, we reach a level, then we have to acclimatize for some time, and then we will be ready to go higher. This is also what can happen now, these 8 months of consolidation. Could be also the breath before the next jump.
Yeah, my reasoning is that there's actually substantial selling happening from the hodler cohort, like, and understandably so. And maybe I can pull some other chart here. Let me share. I actually have a chart on that, so it's easier to explain.
Yeah, I'm convinced that people are selling a lot. I mean, it would be wonderful to see how Unchained, because it's evident to me. It's consolidating, people are selling. Yeah.
So this is actually the hodler profit taking, and so it's what I do here. I kind of reset it at the bear market bottoms, and so you have cumulative profit taking from the hodler groups measured in BTC. So and actually I do measure it in BTC to compare against previous cycles, and you see that there's actually, you know, this cycle again, we've had substantial profit taking from the hodler cohort. You know, we're near like actually levels of previous cycle peaks. Like we're getting there, we're approaching them, and this time actually, while price hasn't risen like, you know, the same as previous cycles, and so my explanation for that is that you know, for 2 cycles practically, hodlers have been waiting for that 100K level, and you know, they're also losing slightly patience because we have such a gradual growth, you know, and so there's just more. There has been like more profit taking, even though we haven't had the equal rise or gains that Bitcoin made, and so many people are in a way disappointed because they, you know, they think like, oh, Bitcoin is trading like a tech stock, like it's manipulation, it's paper Bitcoin. But I actually think it's mainly sell pressure from that hodler group, and because you have to remember that like 90% of the entire supply of Bitcoin got actually mined in the first 10 to 15 years, and so a lot of those coins got all distributed, you know, among that hodler group, which bought coins at, you know, at $10, at $100, at $1,000, at $10,000, and so you know, we're an order of magnitude higher now again, and so I you know, that means substantial gains for this cohort, and so so I think because we had so many coins in the hands of that group, and we're now getting to, you know, levels that Bitcoin is fairly expensive, like for at least for retail, you know, someone like an average person in retail probably can't afford a whole Bitcoin, you know, and so that didn't used to be the case in previous cycles as much, and so I think there's a lot of selling happening from the hodler group, or actually, you know, we can see it in this chart, and even though, you know, price hasn't risen as much, and so it just means that there are more sellers, even though we haven't reached like fairly high prices, because there is a certain like demand, a flow of demand from institutions coming in, and treasury companies and so forth, but it's the sell pressure of the hodler group practically that keeps the price where it is, and you know, until that sell pressure stops. So as checkmate set. Like, so if you get used to that level that you are when you're climbing the mountain, that is just a long consolidation, and it allows for the sellers to dry up, and practically when there's no one left, we can shoot up again. But we're at a market cap now of 2 trillion, and so there's more participants in the market, and so there's just a more quickly a willing seller for any given price. And so I think that is mainly what is happening. So we have had like a combination of less retail hype plus more gradual institutional interest, and together paired with the hodler group that has been waiting for 2 cycles for a 100K price. And so it feels like manipulation or paper Bitcoin, but actually I don't think it is. I think most paper Bitcoin probably got cleared in that 20. I have a chart on that from my recent newsletter as well. So in the 2022 bear market, we really had this cascade effect of Terra, Celsius, Voyager, FTX, BlockFi. They all went underwater, and if Coinbase, for example, were doing paper Bitcoin, I think they would have been hurt as well in that 2022 bear market. So I actually don't believe, because Coinbase is the custodian in general for strategy and for like the major ETFs. There are actually too many coins are in the hands of Coinbase, but that's another topic. But I don't believe that they're doing too much shady stuff. I don't think they have paper Bitcoin, because they would have been hurt in the 2022 bear market as well if they really were doing wrong things. And I don't think with such a lesson so recently that they suddenly would now think, okay, since we now have strategies in ETFs, we're going to do paper Bitcoin. Like, that doesn't seem logical to me. So therefore, yeah, I don't believe there's no real evidence for paper Bitcoin. So it feels maybe manipulation and paper Bitcoin, but actually I think at the moment where we are now in a cycle, there isn't nearly as much paper Bitcoin floating around as there was at the peak of the previous cycle.
Thanks for showing the map, and I totally agree with your point. I hear almost daily someone saying Nix is paper Bitcoin market manipulation, but more likely is the selling pressure from those who bought a long time ago, or for those who are impatient, bought 3 months ago, but Bitcoin, it looks like it's not going anywhere, and they sell. Also, I think it's very different, because if someone bought a few months ago, 1 year ago, and is selling for small profit, then we can say that it was not a good decision, because Bitcoin you need to hold for 4 years to have the real gains at least. But if someone bought at 1K, 2K, several Bitcoin, and now want to sell a portion of Bitcoin to uplift his lifestyle, it perfectly makes sense. Actually, it's also the point of having Bitcoin.
Exactly, and so 90% of that supply was basically in the hands of hodlers, retail, and so now institutions are gradually adopting, and we can actually, I check the institutional flows as a proxy. Again, I use the ETF data from the SEC, but we can actually see that there's a substantial amount of institutional interest for Bitcoin, and so we actually get like a change of hands from. I wouldn't call it weak hands, because the hodler group is of course the strong hands. Yes. But if you're sitting on gains like 10x gains or 100x gains, even like it's logical that at current price level there is some profit taking.
Exactly. Okay, thanks for the reply. Next question will be on Francesco about the ETF.
Yes, do you think the ETF, because the big question is when and if the retail is going to come back? Do you think that because of the ETF, the retail will never come back, or come back to a smallest extent? And how this will reflect your model, especially the spiral model, even if like we have a question in the chat, like C were asking, what if what is actually going to happen? Because now we have tomorrow, September 17, we most likely 100% we're gonna have, forecast we're gonna have a rate cut. So, and the rate cut, once they start, they go ahead for a while. So we are in this situation where the short-term sellers are not picked, but they could pick, and then the real bull run starts. But then how this is going to, are the institutional flows, the ETF flows, going to impact the retail coming into Bitcoin, and therefore this impacting the price? We could potentially have a steady climb for another 18 months if this holds true. But this is a really big question, whether or not the retail is going to come back. And are there any sign, any geometric chain that could facilitate our understanding, our forecast of this retail activity coming back? And if we compare that to the ETF flows?
Yeah, good question. I'm going to use some charts maybe to explain this. First of all, like Bitcoin has been trading in like this entire bull market in a fairly like structured channel, which you can see in the chart here, and mainly actually in the lower part of the channel, except when we had like catalysts like the ETF approval. We were managed to kind of trade in that upper channel. The same with the election, with like this pro Bitcoin regulation, suddenly like that caused us to go there. And actually there was a spike of hype. So I like to use short-term order supply as a proxy for hype in the market. And you can see how high that peak was in 21 in the 2020 cycle. We haven't reached like those levels this cycle. We had a bit of ETF hype, but it wasn't enough. It was also kind of early in the cycle still, so I don't think the world was ready for Bitcoin like at that at like 100K price levels or so yet, and so the hype was not that much. The same for the election. We actually even had a bit of less hype, but still those inflows of hype caused the price to reach the upper channel. Now, the bullish thing is that we're currently moving up again. And so it's possible that we get another wave of hype and that like retail might come back. Although you have to realize in general, when you have like a lot of hype in the market, like the higher we go in terms of hype in this metric, the longer it takes for hype to come back. Because once hype fades, like, so if you really have a blow off top, and hype fades, it doesn't come back. People are just going to leave and think it's a scam or they lost their money. And so that's why it takes this whole like process of psychology again, like a build up. We go through a bear market, we make a low, like we have this final capitulation, and then price can start moving up again, and then people get a little more excited again. So you have this whole cycle of psychology, and that allows again for hype to arise. And so this time, we haven't reached like peak levels of hype. I still think it's possible like to have a bit of like this consolidation and then possibly again get another spike of hype as we did, and that indeed could be due to a catalyst. So you mentioned the rate hike, like so indeed we're going to move from QT to QE, and so I think I'm not that interested in the event itself, like the rate cut. I mean, we could either pump or dump on that day. I'm not sure that, like, to me, that's kind of like noise. But indeed, the liquidity that gets freed up after is what's going to be interesting, because that can flow into risk assets, including Bitcoin. And so, maybe indeed that can cause more hype in the market and allow us to reach like that upper part of the channel.
Yeah, maybe I think you can see here that probably these two spikes in 2024, 2025 were not organic, were given by the ETF approval, the election, or external events.
Exactly. So, the organic growth is kind of within this channel, and I to me, like, the reason why we're moving so structurally is because we have this kind of constant flow of institutional capital. Even passive demand is coming in, and so that also kind of limits a bit of volatility to the downside. And with it, we have this sell pressure from the hodler group, which they have been waiting for 2 cycles for these type of prices, and so like that together to me causes this natural growth, which is kind of shown in that lower channel. And so whenever there's hype in the market, so we get like a real catalyst, we can like overextend a bit to that upper part of the channel, and but it will come down again, because like such spike of hype are never sustainable, and we can see that, like here, like in the 2020 market, when you have a huge increase in hype, like we reach a high price temporarily, but then we have an 80% correction, and I think this time also that's why there's like no real basis for a major bear market, because we have not reached like those overextended levels. And so to me that also means, and we've had these actually periods of long consolidations, like 6 months consolidation after we reached that top of the channel, and so we actually had like a bit of a proper reset to the mean, and so we're able to start growing again more organically. And so this is indeed why I think it's reasonable to assume that the cycle could continue into 2026, because if we never reach those overextended levels and there's no real basis for like a proper bear market, the worst thing we practically could get is like this 6 month consolidation or so, which feels maybe like a mini bear because price is moving sideways. But it also depends on how overextended we are. So now we're even in that lower channel. Now, if we do break out, like on if we fall below the bottom of this lower channel, that would be maybe a slightly more worrying signal. Like that would mean the bull market is perhaps over. But again, I wouldn't expect like an 80% drop. Maybe we get like a 40% drop or something, because again, we have not reached like those overextended levels.
It's interesting that every year we say, okay, Bitcoin is kind of boring, but every year, if we miss the 10 best days in Bitcoin, probably there are almost no gains. Also, last year we had some days before the ETF from 40 to 50, then end of February from 50 to 70, and then the election from 70 to 90. So in 8 days it happened, or the rest was consolidation or going up and down. And this year we are seeing similar.
Yeah, it's true. So imagine here that maybe the catalyst will be that rate cut, which practically will be where now the price ends, because it's in 2 days or so, I believe. And it's like a 99% chance of that happening. But I don't think, the event itself is not the catalyst, but the liquidity that frees up after could cause like this maybe a slight parabolic move towards the end of the year, which will feel like we're still in the 4-year cycle. It depends. Like, so if we really get overextended towards the end of the year, I still think it's possible to stay within the 4-year cycle. But if we kind of just gradually move, consolidate, reset, and so forth, then also an extension is more likely.
What do you mean with overextended? Because now, for me, if I hear 150 end of the year, is not overextended. It's on track on these 8 months of consolidation at 100, 120. Or for you, 150 is already overextended, or 200.
Yeah. So with overextended, I mean, for example, we can look at standard deviations from the short-term holder cost basis, or in this case here, you could say reach the top of the channel. Which is not very sustainable, because you can see we reached the top and then we started consolidating. We reached the top, we started consolidating, and so it depends on. You can look at, like, I also have a value map which you can look at overextension. There we are slightly overvalued, but we're not highly overvalued. So if we would reach like highly overvalued, it's when the indicators start getting really high values in general. And there's it will be across several indicators.
So if we follow the channel, we draw a line, imaginary line. If you reach 200,000 by June 2026, if we go without retail mania, I think. Do you have any projection on the?
so I think we need actually a bit of retail mania to overextend to those kind of levels, because institutional flows tend to be more like general flows, and so they actually cause this gradual move up, like this more constant move up, and so it's more retail that is like hype driven and suddenly like a sudden overextension, which we saw with the ETFs or the election. It's mostly due to retail hype suddenly coming in, and of course, retail at these price levels, they don't have the same amount of force that they did in previous cycles, because, as I said, like 100K Bitcoin price, almost no one in retail can afford. Where in previous cycles, like a 10K, that was still like slightly possible. Now that's like out of reach for most, and so retail. We need actually. I think institutional demand is way more important. And it's a pity, because like sometimes I feel a pity for the Gen Z generation. Like I wish they would be more into Bitcoin. Like I feel like most Bitcoiners are like slightly older, obviously, like logically, because they are thinking of pension or like investing at a younger age. You're not so much into that. But the fact is, like, they actually need Bitcoin, but we don't need them as much. I think actually institutional capital is what's way more important. That is actually flowing into Bitcoin through the ways of strategy with their products, like, which allows for bonds to flow, like the demonetization of bonds, which can flow into Bitcoin. And there's all kinds of institutional adoption happening in general. I think that's the development we actually need, because that's the capital we need to keep on moving up. But logically, there is a lot of distribution from the Hodler Group, logically so, because they own 90% of the supply.
Thanks for pointing out. I agree on retails. Every time that Saylor is, for example, today I think he bought 500 Bitcoin. So good that these Bitcoin are out of circulation for a while, but we have 500 less people that could become whole coiners. Unfortunately, I said, but it is what it is. We are also kind of surprised why this 100K was not a catalyst as we thought. Before reaching 100K in X was mostly, okay, after 100K retails will come. But I still saw some, they will remain still skeptic. And some others say, no, it's too late, it's too expensive. So like there is no...
Yeah, I indeed think there's a lot of unit bias with the retail. They think 100K is too expensive, like too much out of reach, and they don't understand that it's about the supply too. Like the price doesn't really matter if you don't take the circulating supply into consideration. But yeah, so there's a lot of unit bias happening, unfortunately. With ETFs, luckily that's not the case. They trade at a different price, and so also I think in general institutions are less susceptible to that unit bias, and so yeah, I think therefore indeed retail hasn't been there hasn't been an equal amount of retail interest. I think like during the last two cycles they were mainly retail driven, and so the many people that were interested in new tech, like they got in at in those cycles, because like there was a lot of it was really mainstream, it was in the news, and now less so. Like yeah, we're at 100K, but people still think of crypto many times as a can. They put Bitcoin in the same category as crypto, and so I think therefore it's unlikely for retail hype to like really suddenly start coming back now. Like if we didn't do it at 100K, why would we at 130 or 140 suddenly? Like would they then come? Like maybe at 200 or 150 could be. I mean, I hope. It would be cool if they do, because we can overextend, but in a way, like that is anyway, it's not sustainable, right? So it's a gradual flow that is more important.
Maybe the retail will come from the financial advisor and the retail customers at the banks or the funds, investment funds. Maybe.
Indeed, possibly. Like we, in the US now, since we have this more proper Bitcoin regulation where banks can start offering. So they're all gateways to Bitcoin, but I think in general, retail was the most capable group of buying Bitcoin directly via exchanges and so forth. it was actually institutions that were not able to because of regulations and rules. Like it was not as accessible for them. So I'm not sure about retail, but fact of the matter is, like as I said, like we don't need as much retail. Like it's actually institutional capital that is probably more important, because that there's like a big amount of institutional capital that needs to store value, and so the demonetization of bonds and real estate is actually much more interesting than like capital from retail.
Yes, I will say just 1 second for our listener. If you need utterly secure custody solution, self-custody solution for Bitcoin, to look at bitvault.sv, which is the first Bitcoin wallet solution to solve the problems of physical attacks and hacks, thanks to the time delay over multi-sig technology. It's like having a timed vault, the one that the banks use, into your pocket. So we are running under 99 lifetime discount. I invite you to head over to our site bitvault.sv and secure one of the few spots available, launching in a couple of months. Oh, thank you very much.
Thanks, Francesco. Johan, your turn on question for
Yeah.
demand or whatever. What other question?
I took a lot of notes. I'm writing also for the Bitcoin layer on Bitcoin treasury companies and also a bit of on-chain data. But I found that there's a lot of confluence for the end of the year. I think at a level of $145,000, $150,000 being the short-term holder. One standard deviation is, I think, around 145. Option market price in with expiration date on December 26, within one standard deviation at 145. The gold all-time high was 1.16 kilograms of gold in Bitcoin, and that's currently around $150,000. So I think there's a lot of confluence. I saw a lot of confluence. That we could go to 150 at the end of the year and still be in that range that we talked about. But I also want to highlight something that Ruud said, and this is what I've been feeling about adoption and about that. Like if you look at realized price, I always think that realized price is really a good gauge for Bitcoin adoption. Like literally and figuratively, and because only in a bear market the realized price sometimes declines. It doesn't happen often, but it really is that feeling, that meme, from, all right, I'm done with this. I'm never putting any, not again $1,000 in this shit, and because they lost money, and it takes a lot of time before those people are getting back. So I think there was a very something I just want to highlight that Ruud said.
Yeah, so I agree that towards the end of the year we could reach those price ranges. So I still thought 140 to 240 practically. It's a big range, but I think that is reasonable to reach, and actually with the going into QE that seems possible. So I think we actually now have the S&P and the Nasdaq trading an all-time high. And Bitcoin has been very correlated. I have a chart on that, which is this one. So it's the risk on asset performance, and many times people look at the performance, so just percentage gains from, for example, year to date. This one starts slightly earlier. Why? Because it was a point in time where all three assets had an all-time high at the same time, and so I like that better as a starting point than the beginning of the year, where we were kind of already again consolidating, and so if we look at that, where we can see just Bitcoin being slightly more volatile. It trades like below the S&P and above it, and so recently we had the 124K all-time high, and now the S&P and Nasdaq are again trading an all-time high, but Bitcoin is not. where we had this overextension. But we can really see that the performance of Bitcoin has really been trading like a tech stock pretty much for the past year, just slightly more volatile than the S&P and Nasdaq. But to me, it's amazing that we're kind of at the same level of gains. My reasoning here is that is due to institutional interest. So we have Bitcoin is actually seen as a risk asset. We're in that phase of adoption, and it's trading in portfolios in the category of risk assets, and so it's also trading as a risk asset. So yeah, again, people are calling manipulation and paper Bitcoin, because this is happening. But I actually think there's a substantial sell pressure from that hodler group. Plus this gradual demand, Bitcoin trading in portfolios of institutions that are having Bitcoin trade this way.
Yeah, I mean, this is a great chart, and I think your analysis is spot on. And I want to ask you, because you're referring to the S&P and the Nasdaq. Do you also track Bitcoin versus gold? Because there's one thing which doesn't sit me well. It's the growing divergence between you have this. I don't know if you're subscribed to the power trend. Basically, it's just math, and I don't know if you can be pro or con. I think it's just what happened. But the dollar value power trend is around 109, I think. So the trend line at this current date is 109. So then we're a bit overvalued versus the dollar power trend. But the gold power trend, it's at, I don't know, 58 ounces of gold. I mean, it's around $200,000. So there's a big divergence happening between those, and I don't know, how do you think about that?
Yeah, so I mean, gold has been there's a lot happening in the world, and gold has been doing very well because people fly to safety, when the world is kind of in turmoil. So we have these wars going on. Actually, Europe looks pretty bad, and so there's gold has been doing wonderful. Obviously, gold. I think Bitcoin will outperform gold practically over a sufficient time period, but gold temporarily has a good trend, and Bitcoin even broke down in terms of gold, and so that was actually not a positive sign. But I think it's due to the traction in gold currently. Many people are not happy with everything that's happening in the world, and so there's a lot of demand for gold. There was I think I'm not sure if that means that there's going to be a recession, because people fly, when people buy gold, it's usually because of fear, they actually have a negative view on what's going to happen in the world. And whereas with Bitcoin, it's more about optimism. So they believe actually we can solve and we can get to a sound money standard, and Bitcoin is a good store of value. And so in a way, I also think Bitcoin will never trade the same as gold. Bitcoin is much more liquidity driven, and now it's seen as a risk asset because of its volatility. But it will never actually trade as digital gold because it has this more optimistic view of the world. And so it's the negative people that invest in gold because they believe the world is going to go to shit practically. And so with Bitcoin, that's not the case. So that's a bit of my view on gold. Now, gold tells me a bit more just about what the state of in which state we are in the world, which is not a good sign.
No. It's basically the doomers versus the zoomers. But so just one last question, and then Alessandro can take it over. So what do you think is most likely to happen? So do you think, because basically gold is then so do you think Bitcoin needs to like Bitcoin needs to run towards gold, or gold is overextended and needs to come down? Basically, is gold overextended or is Bitcoin undervalued? Which one do you see happening?
A
Yeah.
bit of both. I mean, in a way, gold is not undervalued. If you think about all the money printing and the performance of gold historically, it's actually still undervalued. So it could rise, like also still a lot more. If thinking about the amount of paper gold that probably exists out there. But indeed, Bitcoin is also slightly, it's not as overextended. But again, on a long time frame, Bitcoin will outperform gold. And I think currently, indeed, I'm not saying it's a local top because I don't know what's going to happen. It can still go a lot higher if we get to a recession or at some point, even if that's by the end of next year or so. But yeah, it just shows the amount of conflict in the world. And at some point, I expect that things are going to move again to a better direction in the world, and then maybe gold will again be less interesting.
Yeah, thank you.
I would say on this point how I see gold, how the metrics, the behavior in the past cycles are confirmed. I mean, the gold is the first responder to liquidity injections. And this is because it's perceived as the safest asset. So when you have a big liquidity injection, where do investors put the money? In gold, because it's the safest. Then they have more funds because more money printing. And then they go higher on the risk curve, which go to NASDAQ, then they go to Bitcoin. So I'm very bullish on the gold being high, because when it stops to grow, then they rotate the other capital into more riskier asset like NASDAQ and then Bitcoin. So I don't think yes, it's also true that gold behaves well in periods of crisis, but that lately, maybe because we have seen a big crisis, or during COVID, it did well for a while, but then it's what matters to us responds very well to liquidity injections. So I'm really bullish for gold going up, for Bitcoin seeing gold going up. I mean,
also from my side, I think one of the reasons why gold went up is because in the last years, due to COVID, we had higher inflation, so many more people got interested in the money supply inflation, so they understood more about money, and they moved then to gold because it's finite asset and is known. Bitcoin is still unknown. The education level of the normal investor on Bitcoin is, we say, poor. That's why also it's related to S&P 500 and the NASDAQ. Otherwise, it will not trade as it is. So maybe they move to gold because they start to see that the supply is devalued. So they go to say what they think is a safe, scarce asset.
And I think likely also due to I was going to make a point, but you kept on talking. Let's say it was. I wanted to say so with the U.S. Dollar losing a bit of the status, of reserve currency, so you have a bit of inflow into gold as well, I guess, because of the less people are interested in buying U.S. Treasuries, and so that they put it in gold instead.
Yeah, they wanted a non-counterparty risk money.
Yes, it's also, if we look at the chart, gold has outperformed the S&P 500 the last 20 years, was the best investment. And that validates that maybe it's also an educational take. You say, yes, that validates Austrian economics, because gold did it. It outperformed the S&P 500. So can Bitcoin. And not only because it did from numerical standpoint, but also in the future as a behavior trend. Yes, it's all positive. I mean, gold is the closest friend of Bitcoin, and it's really opening the door for what I believe is will be a continual bull run. The only doubt will be if it's going to be spike or more constant and gradual. We'll see.
Yeah. Yes. we are approaching also 1 hour of the episode. My last question for you, Ruth, will be: we know that all short-term prediction we have to take it knowing that Bitcoin can do what you want in the short term. If you had to bet the price end of the year, but even more important, let's say June, September next year. Generally, we have Q4 the top, and then after 6-9 months bear market. If you have to bet? We know that it's very uncertain. What will be your most likely scenario?
Guessing always price predictions, right? Yeah, so it's very difficult. So it depends. Actually, I think the next months are going to be very defining for Bitcoin as well, because we're going to reach that end of the 4-year cycle. Are we going to get a parabolic move or not? Actually, things point towards moving up more gradual, and so if we do, we can indeed extend. And so if we stay within the channel, it would kind of mean that I would have to look at the low of the channel by that day, June next year, you said. I don't know exactly, but I think it's possible to reach 140K by the end of the year. That would not be too overextended, and we could correct from there, a bit of consolidation. And people might actually expect that could be a cycle top, and then we just get like a long consolidation, and then again, like reach a new all-time high or so in 2026. That's definitely in the cards. And so I think once there's an all-time high in 2026, also that would be like pretty cool evidence of the 4-year cycle finally breaking.
Thanks for the reply. Actually, also this, but next year in January is a bad year. Is also one of the reasons why people choose to not invest in Bitcoin. So at one point they will run out of excuse why. And maybe if we have all-time high in 2026, it will be further proof that the asset matured forward.
Yeah. If I had to point on a factor to cause a spike in price in the next 2-3 months, maybe retail, yes, it's a bit less likely, even if it's not a 0-1. But maybe the behavior of the people in general, more importantly, the supply shock. If the compounding effect of the halving usually show its virtues in after 18 months. So could be that the compounding effect of shortage of supply will manifest even if the retail will be less.
I think, I mean, historically, so we're approaching Q4, which is like the most bullish cycle part of the cycle, where we historically always had this parabolic move. However, this time indeed there's a bit of absence of retail, which maybe if we don't have hype, we won't spike as high. I think institutional adoption will continue, at least like a certain amount of like passive flows, which will kind of limit downside. And so therefore, indeed, like this 80% bear market seems very unlikely at current price levels. But perhaps if we really were to reach somehow like overextended levels for whatever reason, maybe indeed the QE, like going from QT to QE, will set like a further bull market. And Bitcoin is also highly, as we showed that chart where it's highly correlated to other risk assets like the S&P or NASDAQ, and so it also really depends on macro. So if the S&P and NASDAQ, which currently are at all-time highs, continue, I think there's a very high chance of Bitcoin continuing as well.
Thanks. Always interesting and educational replies, Ruth. Before we close the episode, where can people find you?
Yeah, so I'm at The Irrational Root on Nostr and Twitter, and I'm building the Bitcoin strategy platform.com, where you also can find me on Substack, so bitcoinstrategy.substack.com, where I have a weekly newsletter where I discuss these charts, where I kind of curate all the on-chain data and like point towards what matters most at a certain point in time.
Okay, thank you. I think many people who listen to this podcast, most will already follow you, but many others will follow you, especially with the next 6-9 months, because we will be like unsure territory. Thanks again for being with us. It was great, all your chart that you explained, and I guess also many listeners got educated on what happened in the past, how is the correlation with other assets, and what can happen in the future according to on-chain data. I want also to thank Johan and Francesco, as always. It will be great to host with a great question, and looking forward for the next episode.
Thank you
Thanks,
so much,
Ruth.
guys. It was fun.
Thanks, Ruth. It was a great.
Happy to be back on sometime in the future.
Yes.
All right.
Definitely.
After 200,000.
Yeah.
All right, deal.
Let's say 150 next year
Oh,
somewhere.
in 2 months. No.
Let's go.
Bye, guys.
All right. Send it, guys.